Hello everyone, it's Calvin here. Thanks for checking out the video. Hope everyone's having a great day. Today is Thursday, January 10th, 2013. Let's look right into the SPY. Okay guys, we are consolidating here and we are getting a move higher. We did break this consolidation high, so this market does look like it wants to go higher. I mean, we consolidated enough off this fiscal cliff move, and now we did a nice base here, nice high base, holding the upper range of it. That's very, very bullish, guys. So this has proved itself that it wants to go higher in the short term. Now we have to contend with the next pivot. What's the next pivot? Well, it's this 147 right here. But we did consolidate below it. Whenever you consolidate below a major level, it's building energy, coiling, if you want to say that, below a major level. It wants to go higher. This is minor now. These are actually, this is a minor level because we consolidated below it. Okay, guys, and this is minor obviously because we consolidated, busted through it. Now we have to contend with this next level. If you want to see constructive movement, you want to see some sideways action, up move, sideways action, it's going to take some, I believe, to break this, it's going to take some heavy consolidation, and then it can go higher. But right now, it has to deal with these pivots in the short term. But right now, it looks like the market's fine, holding up well, holding above this inverse head and shoulder neckline, guys. Called this pretty much once it broke it, and since then we held it, bounced off it several times. If you look intraday, you can see how that red line holds very important technical significance. We bounced, danced around it many times, bumped our head above it here, paused here, bounced off it, and just acting as very, very, very important resistance, guys, support and resistance. On the bigger time frame, intraday, you don't use it intraday after so many hits, but it's a reference point on where do you close at the end of the day. See, like on this day, I thought maybe, okay, for example, perfect example here. On this day, I thought maybe the pattern would fail because the bigger time frame on the inverse head and shoulder. Let me go back so you guys know exactly what I'm talking about. This pattern, I thought maybe it could fail because what I was seeing intraday. Okay, guys, this inverse head and shoulder. So I like to break it down on the intraday time frame to see just some kind of clue that perhaps that bigger pattern might fail. And what did I see? I always like to look for head and shoulder, right, or double top, M top, something to that nature. And we actually got it. We had a head and shoulder pattern. I was like, okay, this could be the sign that the bigger pattern might fail because what's going on intraday. But we have to wait to see where it closes, right? I told you this red line is the neckline, and it's very important to see where it closes on the daily print. Okay, so I thought maybe off this pattern and a bearish wedgish bear flag type-ish pattern off. So we have two bearish patterns. We have the head and shoulder and we have a bear flag, and it's back testing here. I thought maybe if it came to fruition, we would close below this red line on the daily print, but we did not. See, that's a very bullish sign. We actually closed back above it. We closed back above this smaller head and shoulder pattern. Okay, I'll make it a red so you guys can see it. The red lines are all necklines for. Okay, so this one is the head and shoulder on the daily chart. Okay, the inverse, but this is a smaller, micro head and shoulder pattern on the intraday time frame. So it negated this head and shoulder pattern, and it closed back above this inverse head and shoulder neckline. So that's two bullish signs. So, and sure enough, we're getting a move higher. Okay, so it's a beautiful thing. Whenever you close back above a neckline, so this is the head and shoulder on an intraday time frame, an hour chart, you can see it as well. If you close back above it, it negates the pattern. Okay, let me go on the hour chart. You can see it more clearly. Let me zoom in. So this is your head and shoulder pattern, right? Right here, left shoulder, head, right shoulder, and we actually closed back above it on the hour chart as well. So this pattern failed. Everyone that was short has to cover and to get a gap up, and that's the reason why you get big moves in the opposite direction when a pattern fails, because everyone that played this pattern, I didn't play it personally, but they have to cover, and that's the reason why you get a nice move in the opposite direction. It's usually big. It's an old saying in trading: the best moves come from a failed pattern. Okay, guys, so that's always important to realize. And we did get a nice gap up inside bars off this pattern and bounced nicely off the 20 moving average on the hour chart. And now we are in this little rising channel. Beautiful parallel channel. And the reason why we markets like to trade in parallel channels is because of market symmetry. A lot of moves on the market are very, very symmetrical. Very, very important thing to realize. Okay, guys, that's the SPY on the daily chart. That's what I'm looking at. Let's look at Apple Inc. Apple gapped up nicely off the news. Tim Cook visited China. Maybe perhaps there's a China mobile deal with the iPhone, but that gap up was very short-lived, guys. Pretty much failed. And if you look at this chart, you should not be surprised that there was a big sell-off. Regardless of all the gap ups being sold into lately on Apple, look, you get a gap up. It's always it's very short-lived. Right here, we had a gap up, very short-lived, and sold off. Because look, it's below, price is below a 200 moving average, okay, on the intraday time frame, and it's sloping down pretty harshly. So if it wants to break it, it has to do something like this. And right now it's more constructive on the second hit. It's going sideways. Let's see where it wants to go. Now it's on the second hit, you wouldn't take it, so it is consolidating. There's less strength now on the second hit, so that's why it has the strength to consolidate it, and it's holding up here. So let's see where it wants to break, up or down. But this is very, very intriguing, guys, to read these charts. It does also coincide with this double top. So you should not be surprised that Apple sold off beautifully in the morning off this nice gap up off the China news. Let's look at the hour chart. Maybe there's other resistance as well. Not much here, not much showing there, but beautiful nonetheless. So guys, on a daily chart, as you guys know, I called for some sideways action, okay, since pretty much the November 16th low, because after, like I said, after a big down move, you like to consolidate, and that's the reason why I sold a sell strangle this week. I don't believe or anticipate a big move in either direction until earnings. There's no catalyst. Even that news off, China news, Tim Cook, that was very short-lived. It was just a very, very small bounce intraday, and that's all you got. But like the big catalyst is going to be earnings, and that's why I sold the sell strangle, a 600 call and a 460 put. Now, why do you do that? You do a sell strangle because it's a neutral strategy. You think the market's going to go sideways or whatever you're trading, and that's exactly what we are getting. Look at the tight range, how dead on this trade is. Look at look how it's been in the $15 range pretty much this week, and that's what I sold this week. So that was just way too conservative. I just have way too much room of error to be right. But nonetheless, it's always good to be safe. So that's a beautiful trade on Apple. Let's look at Amazon. I also did the same thing on Amazon. Same exact trade, sell strangle, because I anticipated very little movement off a big up move already. Okay, guys, whenever a stock moves up, it wants to consolidate. As long as it hits a support or resistance, it's going to consolidate. And look at Amazon. Since I sold the sell strangle, the stock has been in the $6 range. Beautiful, guys, and that's what I call for, just sideways move here. So Amazon is holding up, and the volume pattern is decent too. You got a bigger green bar on this up move, so it's holding up nicely. But this 290, 240 sell strangle, beautiful trade. Once again, just way too conservative, because like I said, once you do these trades, you anticipate a range bound stock, and that's exactly what we got. Okay, that's Amazon trade. Let's take a look at Google. I'm still eyeing Google for a short setup, but your downside is limited to this trend line, because these rising channels, right, they like to break, right, eventually, right. These are bearish patterns. They will break, but they never break on the third hit, as long as it's symmetric in time, these hits. So we have to watch, perhaps if it does get to this upper trend line with this pivot breakdown candle. This candle is on really heavy volume, so this is going to be very, very heavy resistance, guys. You got to look at these big red candles on huge volume. If it retraces back there, that's a short, dead on short, especially when you have it lines up with a rising channel, which is also bearish. This is an inside bar. That's all this is. Okay, this is an inside bar. Look to short this. Okay, if it gets in this area, if it does close, your stop's very tight. And if it closes back above 760, you can get out. But your first target would be this, and you could take off here, and you might want to trade back in here. And then if it does break this trend line eventually, your next target would be the 200. But we have to analyze the chart day by day. It always changes. So that's the Google chart, what I'm looking at. Let's look at the VIX. I think I mentioned the VIX was at very, very important support coming up, and we are right there, and we are holding it. We got a nice bounce yesterday, and we are holding it very nicely, guys. VIX has just been decimated. Let's look at the dollar. The dollar is actually putting in a nice head and shoulder pattern, very beautiful pattern right here, guys. So we have to see if this plays out. If this plays out, the market will surge off this pattern, because as you know, the dollar moves inverse to the markets. Is there anything else that I want to take a look at? I think that's everything. Pretty slow weeks for me so far for 2013, but nonetheless, just waiting for a nice catalyst, nice pattern to trade off. But right now, I'm not seeing it. Market's pretty much just dead, consolidating since the fiscal cliff deal. So I'm just gonna wait for a big move in the market and then trade it accordingly. I hope you guys have a great one. Trade it well. I will talk to you guys next time.